What's up? What's up? What's up, my money? No. What's up? What's up? What's up, my mind your money business family? I hope you can hear me because I tried this before and it didn't work. But today, I don't even know why I'm using this headset. I had the fan on and I just turned it off. So I should have kept it on. But I have to hurry because I'm running a little late today. But as you can see by the title, it says S&P 500 closes little change Tuesday after notching all-time high ahead of key Fed decision. Now, nothing has changed this week within the stock market. No reports have come out. No companies have, put out any regulatory issues, any drop in sales, so on and so forth. But the market is down a little again today. Now, if you remember last week, you know, stock prices were driven up. Again, not we, but I've been saying how the market is manipulated by those with money. So what I see is prices were driven up last week, which made retail investors like myself invest more money into the stock market. And so what I see is a small sell-off this week before the Feds come out with um, its decision tomorrow on the 18th about the Fed rate cuts. But let's get into this article. It says the S&P 500 ended Tuesday near the flat line after hitting a record high as the market awaited the Federal Reserve's key interest rate cut decision. Remember, the Federal Reserve is meeting today and tomorrow about the interest rate cuts. Interest rates is very important. When the rates are cut, that brings money back into the market. It allows businesses to borrow money. It allows you to borrow more money. And when you borrow money, you're putting money back into the economy. You're buying that new car. You're buying that house. Businesses are borrowing money to grow. So, and people are pulling money out of those money market accounts because as the interest rates come down, the rates on those high yield savings accounts and those money market accounts will also come down. So they're going to pull money out of those places and put it back into the stock market. Okay, the broad market index closed higher by 0.03% after earlier touching an all-time high. The Dow Jones Industrial Average included inched down 15.9 points or 0.04%. The 30 stock index also hit fresh record during the session. The Nasdaq Composite advanced 0.2%. Hmm. It says the fresh records for the S&P 500 and the Dow come during a historically tough period for the market. Remember, September is normally a very volatile month. It's the most volatile month of the year for the stock market, and it has been for quite a while. So just remember that. And then I say that, and the next sentence says September has been the worst month for the benchmark over the past 10 years, averaging 1.3% monthly loss, according to the FactSet data. Traders also overcame last summer headwinds stemming from concerns over the health of the U.S. economy, right? Um, Disappointing jobs and manufacturing data in August sparked a large one day sell off. However, equities were able to rebound due to more constructive data releases and expectations from the Fed lowering rates tomorrow. How much will the rates be lowered? Who knows? 25, 50 basis points? 100 maybe? Okay, Wall Street is on standby for the Fed's long anticipated rate cut Wednesday afternoon, a move that could help boost earnings growth for companies, following a backdrop of steep borrowing costs and high inflation. So, that's one thing that Feds have to consider. Like, if they reduce rates too much, that could cause inflation to go back up. So, who knows? It said the Fed first embarked on its aggressive hiking campaign in March of 2022. Damn, that was over 2 years ago. The latest retail sales data indicated solid consumer health. Retail sales rose 0.1% in August versus economics estimates for a 0.2% decline, according to Dow Jones. Excluding autos, the number also came in at a 0.1% increase, which slightly missed the 0.2% consensus forecast. Okay, while investors expect a cut Wednesday, the market is divided on the size of the potential reduction. Traders are currently pricing in a 63% chance that the central bank eases rates by 50 basis points. So that's also telling you, like, say when they come out with this rate cut on Wednesday, no matter what it is, the market may go down. The ones that are in control of the market that has the most money in the market could still yet sell off and make it seem as though the market is going down, the stock prices are going down as if the companies are doing bad, which they aren't. So just be aware of that. Okay, 63% chance that the central bank eases rates by 50 basis points according to CME's group FedWatch tool, the professionals. Remember, I am not a professional. I'm just putting out information and providing my opinion. If you need professional advice, please get with or contact a financial advisor, right? We can all agree on that, right? A steeper rate cut may spark concerns about the health of the economy, according to some investors. Hmm. Um, okay. What else? Oh, a 50 basis point cut may further imply a downgrade of the Fed's view on the labor market. That would be more of a concerning sign, said Adam Turquist, chief technical strategist at LPL Financial, a professional. He's a professional, and this is what he is saying. I think there's going to be pretty big deviation between what the market is expecting and what the Fed is going to project. Intel shares jumped 2.7% after the company said it plans to make its foundry business a subsidiary. The Biden administration also awarded the company up to $3 billion dollars in funding through the CHIPS Act. Hmm, okay. So let's see is what are my stocks that I normally post on the page? What are they at today? Nvidia. I think they came down. Yep. They're down by $1.19 today. Still a buy, in my opinion. SPLG, S&P 500 ETF. Oh, they're up by a whopping 5%. FTEC. Oh, okay. They're up 12 cents today. Hey, I'll take that. Broadcom. Okay, they're down $1.55 today. Let's see what Serve Robotics is at. They're down 66 cents today. What is Meta at today? Meta went up by $3.03. What about Amazon? Amazon went up $1.99 today. Tesla, what's up with Tesla? Tesla went up by $1.09. Apple, did Apple go down again today? No, Apple's up by 47 cents today. Okay, I'll take that. What about Google? What is Google at? Google Class C is up by $1.29. So not bad. I don't know, what is Intel at? Okay, Intel went up by 56 cents. What about Oracle? Oh, Oracle went down. They went up yesterday, but they're down. They're down by $2.86. So hopefully you guys were able to hear this video through this headset that I should have taken off, but I didn't. So yeah, so that's all I need to get out of here and go to work. But let me see. Can I find on here like what? How does interest rates affect the stock market? Okay, so what I typed in Google, when I do my research, which I also suggest that you do your research, people. When interest rates are rising, both businesses and consumers will cut back on spending. This will cause earnings to fall and stock prices to drop. So when interest rates are high, people stop spending money. You stop spending money, businesses stop spending money, and it causes stock prices to go down because people are no longer buying those products. Um, so, bottom line, the changes in rates broadly influence stock prices, bond interest rates, consumer and business spending, the state of the overall economy. However, there is often time lag between an interest rate change and its effect on the economy. So just because the Feds are reducing the rates doesn't mean that stocks are just going to skyrocket in price and they're just, going to make you an astronomical amount of money. It's going to take time. So I just wanted to read that really quick and I'm going to end this live. Hopefully you guys can hear it. If not, I will take it down and redo it later when I get home from work. All right, so you guys take care. Hopefully you've started your online brokerage account. You know, Moomoo, E Trade, um, Charles Schwab. You need to somehow start investing into these paper assets. You know, the stock market, uh, on appreciating assets, stocks, Meta, Amazon, the S&P 500, information technology, funds, ETFs, so on and so forth. If you're not comfortable with investing your own money, please get with a financial advisor and have them advise you on how to best set up for your retirement. Come up with a plan. You need a plan, people. Where there is no vision, the people perish. All right, so you guys take care, peace, and have a blessed day.